Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Sorry, we've got some workers in the background, so that's going to be a little bit of ruckus in the background. Sorry about that. Got to do what we got to do. A couple of things going on today in the markets. We have Janet Yellen speaking right now. I'm not really keeping real close track to that, but she is in front of the Senate Testimony Committee. So, that is what it is. The markets are going to do what they want to do. She's going to say she's going to continue to raise rates, and the market's going to tell her, don't do it. Bonds the same way. Bonds are still at historical highs, right around that 166 handle, was into 167 overnight, not last night, but the night before. So that was a historic high in the bonds and historic low interest rates. So the Fed is being faded by the bonds and the overall markets. One thing that we did have going on, the reason why I have on /CL, which is crude oil, we had inventories come out last night, and there was a drawdown of almost 1 million barrels. That was slightly unexpected. It was expected a build of 3.1 million barrels. The deal is going on here. We keep having this build. There's not a lot of movement of petroleum for that matter, but this crude oil is having a tough time right now because it costs about $10 a barrel, from what I understand, to produce the petroleum or gas that we use daily, and it's right around $27, as you can see. So there's only about $17 a barrel profit right there. So it's a real struggle right now because the cost of turning that into gasoline and the cost of carry is really expensive to just house all of this gas that we have, or all of this oil that we have. So there's a big flux right now. So that's all we have going on the docket today for economic news, and take that for what it's worth. Oil really is close to being a bottom, or it's going to start going negative in a sense on what it's going to cost to produce it and what it's going to cost to house it. So that's going to be an interesting story going forward. The overall markets right now, Janet Yellen speaking, did bring most of the markets off a little bit from their highs from when she was talking, but we still have the NASDAQ as the leader, up almost 60 points right now, as you can see here from the chart here of the E-mini NASDAQ /NQ. Going on to the E-mini S&Ps /ES, still in positive territory by about 15 points, give or take. It was up a lot more, but this line right here, I talked about 1865 is going to really act as a resistance area for the bulls to get through. Right now they are really close to teetering around that at 1861, as you can see. Going to the intraday chart of the E-mini S&Ps, you can tell when Janet Yellen started speaking, the market basically started really sliding off down to this value area low. This would definitely look to be an area to buy. If it gets down there, it's lining up really well with the value area lows. The point of control from yesterday, that's going to act as a major support. So that is a little bit of silver lining for the bulls, that they've gotten up into that area of the 165-ish area that I've talked so much about. Moving on to things that I've done. Goldman Sachs, I took this trade, or I added this trade, yesterday. And the reason why is because all of the banks have really gotten beat up. It just seems like they're a little bit overdone at this point. And so I decided to step in, test the waters with Goldman Sachs, who's usually one of the leaders of the banking sector. And I did the March, sold the one sold the 140, bought the 135 put spread, and collected a credit of $1.45. So I sold the 40 puts, bought the 35 puts for protection, and the reason why is because the 40 puts are below the low here for the last year or so. So that would be a 52-week low if we get to there. Disney covered this trade. Now, I had this trade on for quite a while. The market was going in my direction. I had on the March 100, 105 call spread. Originally sold it for $1.13. And as you can see here, implied volatility just expanded on me as soon as I put that trade on. I thought I was going to be able to cover it before the earnings trade, but it was going in my direction. I was directionally right, everything we were talking about, and the market was not accommodating me because volatility was expanding. So I wasn't able to cover that. Now today, after that earnings trade, we can see this volatility crush, if you will, and the market really came off, and a lot of that theta and directionality to this trade came into line. So I was able to buy it back for 24 cents. Now we're going to talk about volatility and how it affects these options strikes and the premiums that goes into those strikes on Friday. And this is what this is exactly what I'm talking about. I was directionally right. This market, I should have been getting theta decay throughout here. I wasn't getting that. I was, short these 100 calls. The market, wasn't allowing the theta to come out of it because the volatility started expanding on me. Even in this big couple of drops the last few days with that volatility expanding, I just wasn't getting any theta decay or any decay in my premium being directionally right. So once that binary event happens, we get that theta or that volatility crush, which allows that theta to come out, and lo and behold, I was able to cover that for well over 50% of my max profit. On to Twitter. Twitter's still a dog, if you will, and just going nowhere. I'm waiting for something good to happen here. I'm long short the 21 puts, which is well up here, and I had on the February 21 puts. I rolled that out in time, keeping that dream alive, as I've done several times, into the March 21 puts, sold those, and collected another 35 cents for that. It is a losing position, but my idea here is to keep collecting premium, lower my overall basis, and wait for a nice big pop in that, and be able to have that turn into a winner. Moving on to IWM, just covered this trade because I was over 50% of my max profit. I have a lot of short deltas in all of these different ETFs from IWM, the Qs, SPY, and DIA. So I needed to take a little bit of that off, especially now that we're up there testing that 1865 area, and I just didn't want all of these indices to have all my short deltas. So covered a few of those, and I had on the March 102, 105 call spread. Originally sold it for 62 cents, bought it back for 27 cents there. And on to a trade that I added today, which was Adobe. As you can see, Adobe has just gotten beaten up, and just decided to take an opportunity to add some long deltas to this to get a little bit more neutral. The overall market looks like it could be trading sideways for a little bit before we take another downturn, which is what I'm looking at. And I put on the March 70, 67.5 put spread, sold it for 64 cents on that. Actually sold the 70 puts and bought the 67.5 puts on that trade to create that put spread. So the 70s are below here, so down here making a new low is what it would have to do. It looks like it's really kind of capitulated out, and hoping to see it just slightly, maybe even flag sideways at best. So that's all I've got for you, or trades that I've done today. Friday's webinar is going to be on this volatility crush and when and where to expect that to happen, how it affects the premiums, how it's calculated, things of that nature, really driving down on how volatility is the thing that really is the driver for most of these different types of option strategies. So that should be a really good one. Hope you guys can all make that. Go to protraderstrategies.com and sign up for that. That's all I got for you guys today, other than if you can't take that, take it easy.